Good afternoon, everyone. Welcome back to this micro edition of the TBD podcast, your Colorado Springs real estate podcast. I'm Rob Thompson, associate broker with the agency here in Colorado Springs, and I'm joined again by Rick Ward. Rick, you want to do the honors? Who are you?
Yeah, so thanks for having me again, Rob. It's Rick Ward with North Point Bank. I'm a local lender here in Colorado Springs, and happy to be on the podcast with you, Rob.
If you don't know Rick, you should. He's an outstanding guy. We were just talking before the podcast about advocacy, and Rick is also a fierce advocate for his people. He'll tell you straight up, no games, just straight up. So follow him. How do they get a hold of you, Rick, if they want to follow you?
Yep, best way to reach me is my cell phone, which is 719-229-0375.
Okay. Are you on Facebook by chance?
I am on Facebook too, yes.
Okay. So, yep, Rick Ward with North Point on Facebook.
Yep.
So today's topic of this micro broadcast is VA loans, and specifically the question is what should a military member know about the VA loan? And so we're just going to have kind of a free form conversation about VA loans. And first and foremost, what is a VA loan, Rick?
Yeah, so a VA loan really is a loan program set up for military members, either active duty or veterans, and that they actually earned the ability to buy a home at 100% financing. It's one of the best loan programs on the planet. Typically it's no money down, and I don't know how far into details you want to get, Rob, but it's an awesome program, and it's attractive to most lenders and most bankers and most people in the market because the VA is literally guaranteeing the loan in case of any type of a default or anything like that. So it's a safety catch, which makes that loan program very attractive to folks in the market. So
yeah, and what Rick is saying, they're insuring the loan, they're guaranteeing the loan. An interesting note, though, is that the VA is not loaning the money. For example, if you get a VA loan through North Point with Rick here, North Point's loaning the money guaranteed by the VA, and that's the attractive nature of that loan. So that if there is a default, the VA insures the loan, right?
That's right.
So you mentioned it's an entitlement for military members who've earned that through some general criteria, such as, correct me if I'm wrong, but if you're active duty, you have to be active duty for 2 years. Is it 2 years? 24 months?
Well, it depends. There's
okay.
It's a whole bunch of different criteria depending on when you served.
Okay.
We get soldiers that get deployed active duty for 90 days out of the Guard.
And then they qualify.
And then they qualify during wartime, those sort of things. So
call Rick for to see if you qualify. But generally speaking, it's a military entitlement. It is no money down, as Rick mentioned. But there are a couple expenses I think people should be aware of, even on a no money down loan. Earnest money, for example. I think we talked last time about who is earnest and why does he want his money. But just know that in this market, you need to have between $500 and $1,500 on average. There's earnest money that exceeds that. I've had a deal or two where we were able to do what's called a promissory note for no earnest money, but those are few and far between, particularly in a high demand market. But anyway, so it's no money down, but you do need to have some cash on hand for the earnest money that is generally refundable, right?
That's correct.
Okay.
Generally speaking, or it goes toward it's really a good faith deposit.
Yep.
And then depending on what your closing costs end up being and that sort of thing, you may get some of it back depending on which interest rate you choose on your loan.
Gotcha. So you get earnest money, $500 to $1,500 you need to have on hand. There's an inspection cost. I usually tell folks that inspections run in this market on average of $300, and then there's some add-ons like radon or sewer scopes that I highly recommend. So I tell people between $300 and $500 for home inspections, and then the appraisal. Some lenders, as I understand it, do collect the appraisal fee up front of approximately $750. I think you don't, right?
That's correct. We do not collect that up front. We allow that to be just part of the closing at the closing table. So it is a big advantage when you're PCSing and coming here. We know how those funds work. Sometimes you're out of pocket for a lot of expenses on your own until you get reimbursed from the government. So we just feel like that's a burden on the client. So we just don't do that.
That's stand up of you, because it's an expensive process. Just adding the numbers up. If you call it $1,500 earnest money, $750 inspection, $750 appraisal, $500 inspections, then you're looking $1,750 to $3,000. But with Rick, you can knock $750 off that, and then So you need to have a little bit of money on hand. You call me at 719-440-6626 or talk to Rick at what's your number again?
719-229-0375.
Then we can walk you through those funds available. But in the end, it is a zero down loan, so you don't have to bring any money to the table for the down payment purposes. Let's talk about credit scores, Rick. I understand that the VA does not actually have a credit score requirement for the VA loan.
Yeah, no, that's absolutely right, Rob. So VA does not have any minimum credit scores that they require. But again, they're guidelines that direct lenders like ourselves in the market here have to kind of manage to and meet. And we also set our own criteria internally to make sure that somebody's credit worthy. It's one thing that you're entitled to a VA loan, but it's another thing to qualify for it. So credit scores are one of those ways that the underwriters and the banks and the lenders determine that what's the likelihood that you're going to repay the loan. So it is something that they set a score at based on traditional history and how things look as far as default rates and how people are more likely to pay a loan back or not.
So as a military member, I might be eligible for a loan based on my service characterization and such, but I might not qualify because I don't have the minimum credit score that I need for your bank, right? And that credit score, 620.
Yeah, 620 is generally the general rule of thumb. We will go down to 600 on a case-by-case basis.
Okay. Call Rick to see if you qualify for your entitlement. You see what I did?
Thank you.
No problem. So we talked about credit scores. So let's talk one more thing about credit scores. One misnomer, if you will, out there is often that the VA loan has a higher interest rate than other loans. Is that true?
Well, and that is not true. That's obviously a myth out there, Rob, or maybe something from way in the past. But typically, the VA loan has the lowest interest rates in the market compared to your conventional loans. Again, one of the reasons why that loan is so attractive: low interest rates, favorable terms, paid back over 30 years, and the fact that you also have no money down, 100% financing, and a lot of the other loan programs, if you don't put money down, you have mortgage insurance. This VA loan program set up so you don't have to do that. Yeah, you save money every month.
A couple $100 a month on an
Absolutely.
FHA loan for mortgage insurance, right? And with a VA loan, you don't have to pay mortgage insurance.
That's right.
The VA is paying it, essentially, or insuring it. Okay. One other myth I think is out there is that the VA appraisal is stricter than the other loans, and I think that's true from an agent perspective in the sense of if you're weighing the VA loan against the conventional loan. You health and safety, Rick said before the podcast. So a VA loan will often, it will have. If you're going up against a conventional loan and you're a VA loan, then the seller will look at that and say, well, okay, if I have any chipped or peeling paint, if I have a broken window pane, the VA will ding that for health and safety reasons as a condition of the appraisal, right? So,
absolutely, Rob. And just look at it this way. They're looking out for your best interests for the health and welfare of the veteran and his family or her family. So it's not meant to be a detriment at all. It's meant to be a positive that they're out there looking for those health and safety things. Doesn't come up very often, but when it does, it's usually something that's can be fixed and taken care of so that everything stays on track to close a home.
It does. If a seller, as a good seller's agent, will prepare their seller. If I list a home, for example, and I see chipped or peeling paint, seller might tell me, Rob, I have no funds for that. Well, okay, we can still offer the house as a VA loan. We just need to be aware that at some point in time, when the appraiser walks through, they're likely to condition that chipped and peeling paint. And then there's tricks up our sleeve, legal, ethical, legitimate tricks, such as, I have relationships with vendors who are painters who trust that I will make sure they get paid. So I can, 3 weeks down the road, I can have somebody do that and get paid out of the funds at closing if those funds are available. So,
that's right.
So so it is a more stringent appraisal, but it's not like they don't go through the house with a fine-tooth comb. It's a health and safety hazard type conditions.
Very obvious conditions.
Right. Last thing I think we should talk about on a VA loan is a pretty hot topic in this military town. Less so as prices have risen over the last couple of years, but still pops up now and then, and that is debt payoff. So I heard, Rick, that you can roll high interest credit card debt into your mortgage. Can I do that on a VA loan?
Well, so not. I think what you're hearing and what we should really kind of talk. So the answer is no. You can't just roll that debt into the loan.
That was a leading question.
Yeah. Rob's quick, humble and slow, but you cannot do that. But there are ways that if we get a borrower in and their debt to income ratios, which is one of those pieces of the loan that we look at to make sure they qualify for the loan, if that looks a little bit on the high side, then there are opportunities for us to maybe pay down some of that debt for the veteran by either seller concessions or, and Rob will explain how maybe if you raise the cost of the house to get more concessions from a seller to pay for some of those things, to make sure that we can get you into the home. So it's a case-by-case scenario. I'm not a big advocate or a huge fan of trying to, put you in a position that's not going to work for you. So we make sure we cover all the details on that. And, if we do this, here's what it looks like to you and what a payment would look like, that sort of thing. So
that's, one thing we were talking about before the podcast is you always have to pay the piper. There's always a cost. There's no free money. And what Rick is talking about. So for example, you want to buy a house at a mythical price point in our market now at $200,000 for easy math. And say now a VA loan allows up to 4% debt payoff. So theoretically, you could take $8,000 of high interest debt and roll it into your mortgage, or just debt into your mortgage, and you'd have a hypothetical mortgage of 208. Now that does not account for all the loan fees and such. The actual mortgage would be like 216 or something like that. But just for easy math, you can theoretically roll that in, but there's a couple of barriers there. One is the house has to appraise for that much, and if the house doesn't appraise, then you're not going to get that debt payoff. And then the flip side of that is if the house were going to appraise for that, the seller would sell for that, and they would, they're probably not going to give away free money from their perspective. And then so say you take that 200 house, if the market, say it appraises at 208, you have to sell that house for that you have to pay the piper is the bottom line on that loan on that. So it's a tactic. It has its place, but just bear in mind that you must always pay the piper.
Yep.
Yeah. Well, I think we talked about a lot there.
We hit the highlights.
We did. VA loans, to recap, it's an eligibility for military members who've earned that via some certain criteria that they can talk with you specifically on.
Sure.
But so you may be entitled, but you may not qualify. So talk to Rick about qualifications as well. We talked about the VA loan does not loan money; they insure the loan. It's an interesting but important distinction, I think. VA loan does not. You'll see some marking out there that says the VA loan does not have a credit score requirement. That is true, but lenders have their own qualifying criteria. We also talked about it being a no money down loan. And that, while accurate, there is some expenses from earnest money to inspections to appraisal, unless you use Rick, that you should be prepared for. So you should have around $1,500 to $2,000 in your hand prepared for this process. Would you think anything you could add, Rick?
No, I mean, I think you hit the highlights. I want to add a couple other things before we sign off on this particular session, is that there's a lot of realtors in town that will study and get their certifications about, being military relocation specialists, which is a great thing to do. But it's a whole lot different when you're working with a realtor like Rob, who actually served in the military, knows the lifestyle, knows exactly what you've been experienced because he's done it himself. So he didn't have to study it in a book or take a test to get it. And then I'm a veteran as well too. So it's an honor for Rob and I to serve those that serve. We really do not take that lightly. And you've got an advocate in your corner whenever you're working with us. So.
Yeah, sure. Well said. There's nothing I can add to that, man. Thank you very much, and likewise. So this has been your TBD Micro podcast. Today's topic was what you should know about VA loans with an awesome lender named Rick Ward. One more time, your phone number, Rick.
Yep, 719-229-0375. Thanks, Rob.